Joining us now, DVX Ventures CEO Jon McNeill. Jon was president at Tesla, overseeing global sales as well as delivery and services, and now sits on the board of GM. Very good to see you, Jon. Thanks for joining us.
Nice to see you.
I was interested, big picture, first of all, on the kind of sales tactics we've seen out of Tesla in the last year or two, particularly when it's sort of quite high-profile tweets from the CEO to say, we're going to cut the price, it's coming soon. And whether that is only ever going to be a successful sales strategy in the short term and sort of undermines the pricing power that perhaps Tesla previously had in the long term.
I think it not only undermines the pricing power, but it also depreciates cars that people have already bought. And that's, I think, a bigger issue. If you purchase a Tesla and the price keeps dropping and the value of your car keeps dropping, it could be below your loan. Mm-hmm. And that means people are upside down in their loans. And that means they're probably not going to buy a second car from that manufacturer. So you've got to be really careful in this industry around long-term pricing strategy and predictability for consumers.
So do you see this as real sign of desperation or just short-sighted tactics or what?
I think this is, as they've said, this is to keep their factories humming. And so when production slows down in a factory, it can really affect your margins. And so I think the main goal here is for them to keep their factories busy.
What is the biggest source of competition now for Tesla, but more broadly the US automakers, but the US EV parts of the automakers? Is it the Chinese players? I mean, the quality of European EVs is really caught up from the traditional German names?
I think that's right. I think it's all of the above. So BYD is maybe the biggest competitor in the world. They've become the largest producer of EVs, and they're out of China. But here in the U.S., we've got now a wave of cars coming to market this year. They're very affordable. So you've got cars like the Chevy Bolt that are less than $20,000 after the incentive, and the Chevy Equinox that's less than $30,000, which is a SUV with more than 300 miles of range.
But still can't compete with those Chinese EVs in terms of price.
On a price point, that's exactly right, because there's a bunch of incentives and subsidies that the Chinese government helps their manufacturers with. And so that's an issue for all manufacturers outside of China to deal with, and policymakers.
Is GM rethinking the EV future that Mary Barra talked about, given what we've seen from the consumer and from competition?
I think, Goldman just published a study that more than almost 60% of consumers for their next car are considering an EV. We sold 1.2 million EVs in the U.S. last year. That's a $65 billion market already for EVs, and it continues to grow. I think we're going to have a rough first quarter in terms of sales data because a lot of the cars didn't qualify for the tax incentive, but that's now worked itself out, and I think we'll return to growth second through fourth quarters of this year.
You mentioned the weak residual value of a Tesla. Is that because of repair costs or just friction in finding a buyer for a used car?
It's mainly because the sale prices have come down. So if I paid $90,000 for a Model S 3 years ago, that car now sells for $70,000. And so that's the biggest driver of the decline in residual values. The repair costs are actually quite a bit less. Like I drive a couple of EVs. I haven't been to the repair shop in a couple of years because an EV motor has only one part. So there's not a lot to break in that car.